Alright, what's going on guys? It's your boy Justin back with another video for you. And in this video, I just want to show you my entire approach to trading. Disclaimer, this strategy, aka this approach here, it has in fact helped me before, in passing funded challenges, getting payouts and whatnot. But, and that's the disclaimer, just because it worked for me doesn't mean it will automatically work for you. This is no financial advice or anything, but this has worked for me. I'm just going to show you what has worked for me, and you can do with that information whatever you want. This is going to be completely free. I will jump into this without any script. I want to make this as raw and real and transparent as possible. And once again, completely for free. So if you want to, make me happy for free, just basically subscribe to the channel because more videos are on the way. Everything is going to be free. Nothing. So I would appreciate a like and a subscription. And by the way, if you may be starting out in trading with a friend or something, just share this video with them because this, and that's how we're going to start into this whole video, this trading approach / strategy can make you profitable if you make it profitable. The approach, in my opinion, is very simplistic. I will give you a system that you can use to go ahead and, just approach the markets with. Hear me out. Don't try anything funny. It will just hinder your entire progress. I've been in the markets for 3 years now, and I, finally managed to, get funded, get payouts and whatnot with that system here. And let's be very clear at the beginning. The only reason why it took me so long to actually make this whole system profitable is just because I constantly changed shit up because I was seeing shit that wasn't actually there. So what I mean with this is, if I give away this strategy to you, please, for your own sake, for your own money and everything, for your own time, if you respect your own time, if you respect your own grind, your own money, please backtest this on your own, but don't, go too far away with this strategy. What do I mean with this? If I show you what a supply and demand zone for me personally is, don't try to adjust it too crazily. You can do this, of course, right? No financial advice, just how I said. But if you try to change it up too much, it's not the same strategy anymore. That's your first psychological advice from me right here, right? If you get a system like this onto your hands just like that, just use that. Don't do anything funny. Don't, just try to get into an argument with yourself saying, come on, this is also another zone. This is also good. No. Just follow the system, right? If you hear anything in the background, excuse me, please. So let's just start. Once again, there's no script or anything. I just want to jump into it very, spontaneously, very raw. What is my approach? My approach is, and beware, crazy word incoming, it's supply and demand based. I know that there's a lot of people out here who say that supply and demand is not really tradable and whatnot, which I can only answer with like the fuck, because any market in the world, every market in the world only acts upon supply and demand of a certain product and a certain interest, right? The price of a certain, product basically is just driven by supply and demand, right? So yeah, how do we spot supply and demand zones basically? What is a supply and demand zones in these markets? We are watching US 100 right now, NASDAQ basically. And I just want you to right now just look at this. By the way, for me, these candles are orange. For you, that they are just red. It's whatever. Don't get it confused. It's nothing special, right? It's just for me so I can, see them better. I just prefer them being orange. Okay. So if you look at the markets right now, they are spiky as fuck, right? You can see this just being sideways, bam, 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 then spiking up, sideways again, spiking up, blah, blah, then suddenly spiking down, blah, blah. Okay, so they're spiky as hell, right? You can see this, like, it gets more extreme the more we zoom in, right? So spikes everywhere. How are we supposed to find out where we could potentially buy, where we could potentially sell, and for how long we are buying and selling? Well, we can do this by finding proper zones. And zones, by the way, for supply and demand, they can be of high quality and low quality. What is high quality? What is low quality? We will, look into that in that video. So just lean back, maybe grab a few notes and whatnot. Let's just jump in. We dissect the markets in hindsight so you can understand this. Look at this here, for example. It's pretty obvious. When you look at like this entire picture here, what do you see? You see a range of price, right? It moved up, down, sideways, whatever, right? It was just jumping everywhere. But there's one particular point to me that stands out. It's that spike right here, right? You can see this. And this is like the first thing that I like to look at. If we look at this spike here, for example, this is the highest spike we had in a long time. This is the 1 minute chart right now, but very importantly, like the chart time itself, it doesn't really matter. Like it doesn't matter at all. It's candles at the end of the day, right? If we go into the 1 hour, 4 hour, daily, 3 minute, 5, it doesn't matter. It's just candles, right? They all give away the same amount of information. They just move less fast or whatever. But still, this here is basically a spike. And after that spike, we went down like crazy, right? We can see this. And we haven't been at this spike before in the past, right? Maybe if we look to the left, we've been there, but nowhere to be seen right now. So we know for a fact that this here is an interesting point to look at, because you can just simply sit and think, okay, last time we've been here, we went down like crazy. And the opposite is also true. Like this zone, for example, like this cluster of candles is interesting to me. Why? Because last time we were just chilling around this area, suddenly something happened and we spiked up to this point. So this point and this point, they are both very interesting to me, right? So what I could do, just roughly just mark them up in any way, whatever suits me, is just for my eye to see, right? And if we go ahead and look just what we've done right now, we lined them up like that. And just roughly, it's interesting to see that last time we've been in this area, we shot up and then we came down all the way down here, almost onto that, line again, and we shot up again. And then we got to this point again. And what happened after we, got back to that point? We shot down again. So very interesting, very crucial point. But I don't just draw any lines on the charts just like that, right? That here, like this white line, that's not enough. What I like to do is zoom in onto these points and actually look for something. If we look at this here, for example, all these green candles just going up, this is a move that only big industries could make, right? Me as a private person, I could never move as much money like that to just make it push like this, right? So what I like to do is basically just see that this is like a big push to the upside and look for the last opposite candle, right? So these are all green candles, they are going up. So I like to look for the last opposite candle, so an orange candle, to indicate from where we could potentially start an uptrend, quote unquote uptrend again. What is the last orange or opposite candle from the green candles here? It's this one, right? And this one. I don't just go ahead and mark up like one candle like this, right? You could do this. This is perfect. But I like, especially on the 1 minute, I like to take like a big cluster like this and potentially would make it like this, right? Like from the highest point to the lowest point. Then we have a like more defined zone. In that case here, because we already have the power of hindsight, we know it actually went down further, and we will come back to that in just a second. Once again, higher profitability and lower profitability or probability zones will be explained in just a second. But in general, this is how it works. And you can see that last time we jumped into this zone, we slightly reacted, right? We came down and we slightly reacted off, to the upside again. So, I mean, if you were super crazy, you could have made like a small little trade here, but I don't like clusters like this. We need confirmation before jumping in a trade, unless we are more of a risky trader. More for that in just a second. If we look to the left again, and we just delete this zone, we could see this whole entire thing as a push, because there's just two orange candles, not very big or whatever, that quote unquote hinder us from going up like this, right? So we could see this as the entire move to the upside, right? This was just, 2 minutes of breathing, right? Because we're on the 1 minute, just 2 minutes of breathing, and then we just, shot up. So we could potentially just take this zone, right? We could just take this zone again, then making sure it's from the very top to the very bottom. But since we know we've never, like if we scroll out again, we've never been lower than that, like in the past. Like, of course, we've been here before, but like in this moment right now, we could have just done it like that, right? So we have our increased zone and whatnot, and then we see that we had our zone. Okay, that's cool. But what now? Now the price fell back into the zone. What do we do now? How do we enter our trade right now? Once again, two approaches, right? Two approaches that you could take. First of all, the aggressive approach. And guys, let me just say this straight up. You gotta be careful with this, and very careful. You gotta determine for yourself if you want to take the risk and whatnot. So I cannot say I've never taken trades like this. I sometimes take trades like this, but waiting for confirmation is most of the time the better thing. But I would just, be fair. I want to be fair and give you, the information. There's two things that we could do: be more aggressive or less aggressive. The aggressive approach would be, now that we defined our zone, we can just, basically wait until we just barely touch the zone and buy from here again, and our stop loss goes under the zone, right? Under these candles. And then next time we just jump into this, we automatically get tapped into this trade and then we shoot up. In this scenario, you could see that this was in fact very profitable, right? We hit come on, look at how far the market eventually got up again. It got up until to this point here, right? So amazing trade, 1-to-5 ratio, right? If you risk $1,000, that would have been more than 5,000, right? Pretty cool. But, and that's very important, on the other hand, we can already see how this didn't work out in this example, right? Because, let's just delete this for a second. You could bring up the argument, okay, so we have another zone here, right? Correct. Because here, last time we've been in this area, right? This spike this spike, last time we've been up in this spike, we completely crashed down. So that's a point of significance, right? Definitely. We have all these orange candles, in your case, I guess they would be red or whatever you colored this. So last time we've been here, we shot down. So now we know that this is like a point of significance. What we could do now is take the last opposite candle, right? The opposite to orange in that case, this green candle here, and mark it up from the very low to the very top, right? And then just, move it like this. So we know that, okay, next time we are in this zone, we can sell again. And let's just say you set your sell limit here very aggressively. Okay, last time we've been here, I want to be automatically tapped into this trade. You can see that this, in fact, would have fucked us over in the future, right? So yes, we came back into this zone, but we then just, ran straight into the stop loss before eventually going into our direction. We can go ahead and actually loosen the risk or whatnot if we just wait for confirmation. So what is confirmation? This zone here in general is still pretty strong. We just gotta wait until we break structure to the direction of our favor, right? So in that scenario, right after we came back to this zone, right, we could see that we just completely pushed through, but eventually we came down. What I would recommend is just look for pivotable points to the downside, like this green candle. This green candle pushed through this entire zone. So I would wait until we would actually, quote unquote, break this candle. Where would we break it? At the point where it started, right here. Let's just assume that we are in a live market scenario and we are here right now. I want to see a candle move to the downside through this candle, so I know, okay, it's time for us to sell. And then you could take your sell from here. Yes, I know we are no longer on our supply zone, but we came just from our supply zone. The stop loss then could be either above the zone to be the safest. I would definitely recommend this, or anything else like this, as a reference, this candle, or this candle as a reference, or just that zone. Some people also prefer to just take this candle as their stop loss, so right above here, and they want to, squeeze the take profit and the risk to reward ratio. Do this at your own risk. Just remember, this is the most safest route. This is the most safest route, and anything here is just whatever you prefer. But you see, from here on, we would have a very profitable trade. And then you can also see that we eventually came back to our other zone, right? That last time we've been here, we pushed up again. But here we can see this zone eventually completely broke. So it's no longer of interest for us. It has broken, and you can see at this point, it's just disrespected, right? Price doesn't care for this zone anymore. It just moves through it in and out. It doesn't give a fuck, right? No problem for us. We can adjust to this. We can just delete this zone. It's no longer of significance for us, right? But now we can just do the same stuff again. This is the lowest point that we've reached. We just scroll down again. We see that there's like a crazy push, like this, for example. And we can see that it was breathing here. So this would be the most interesting supply and demand zone. Take the last opposite candle, this orange, just mark it up from the high to the low. Like the high point starts at the orange one, but it ends down here, and just wait. Maybe we get a touch, maybe not. We can see that on this day, we never had a touch again. No problem. We can leave it for the future, right? As we move upwards again, there's going to be other zones. This is going to just reoccur every time. And here you can see me drawing on these charts, and you can kind of guess in what direction we will go. If I draw like this you see that there are spikes again. And within these spikes, you oftentimes find supply/demand zones again, right? So let's just look at the spikes. By the way, the spikes would be this, 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 and this, right? The market structure points. By the way, once again, there's more videos, coming up for everything. Like, just ask your questions either here or on Instagram. Everything is linked in the bio of this video. Just ask me in the comment section and I'll make videos about this. But I know that this is like a lot for you guys. Once again, free videos are coming. Just subscribe to the channel and I will take my time to explain to you guys, okay? No problem. So we have our spikes here. So we just want to go ahead and look at these spikes. For example, here in this example, crazy push to the downside again, we could mark it up. But that's why we got to wait for a confirmation and we want to go with the trend most of the time. I say most of the time because all the people say go with the trend. I'm a scalper at heart, so I can adjust. I would say I go with the trend 70% of the time. 30% of the time I go against the trade, but then it's just a short trade, not like a crazy risk to reward or anything. But still, you could see a good example of how this zone didn't held and we never actually got our confirmation, right? I mean, this would be something, but that's just too much cluster, right? That's when the experience comes in. But since we know that we are actually uptrending, we wouldn't actually look for sales in that area anyways for too much, but instead look at this here, right? A perfect example. If we just scroll in, crazy push to the upside, and we had the last opposite candle here, and then we would have this zone. And what can we see in the past or in the future? Well, in this case, unfortunately, we never hit it, but it was pretty fucking close. Some people take trades. I would not recommend this. Why? Simply because we haven't touched it yet. But this zone here brings us to our next chapter, a very interesting concept that will determine if a zone is higher probability or low probability, right? And that is gaps. We want to make sure to look out for gaps in the market. What is a gap? A gap is basically just where like this line of a candle is not connected to another candle line, if you understand what I mean, right? So you have the body of a candle, like this green, big, bulky body here, and then you've got these smaller lines, right? And you always want these lines to be connected to each other. So this here, for example, is a good example. You see how, one second, this line coming out of this green candle, right? It only goes up as here, and then it never went any further higher, okay? No problem. The only issue is that the other candle, right? The other green candle here, right? It shot up like crazy, and then it opened a new one, and therefore, wait, this candle here just shot up even further, and it never went down here. So you can see, if we zoom in even more, that these candles left a gap. Maybe if I just put it away like this, you can see here, from here to here, there is like a gap, right? And this is something that we want to see around our supply and demand zones. This is just a general advice, right? But we will see how gaps can actually help us find good supply and demand zones, because you can see, once again, if we mark it up like this, in between here, there's a gap. That gap needs to be filled in with price eventually, right? It needs to come down and tap this eventually, right? And if we zoom out, we can see that this also happened. This gap, even though it wasn't around a supply and demand zone, it was touched. Some people, by the way, they trade like this. They would then just take their trades from here, blah, blah, stop loss from down there. That's not how I trade, at least not most of the time. Sometimes, not always. But yeah, we will go ahead and look out for these gaps in the market for us to increase our chances of winning. Here is a good example. I just found a good example for you. Wait a second. Where is... Holy smokes. Let me just get rid of everything. All right. If we look at this, right? Very good example. We've been in this price range here. Whatnot. Wait, let me just do it like this. We've been in this price range here, whatever. Boom, we just completely shot down. So that's 1, 2, and 3 candles. As these 3 candles went down, it left a gap from this green candle here to this orange candle here, right? It just, oops, what the fuck? It just left a gap in between here. And you can see that this was also touched. But we don't just want to, take this gap as our entry or whatnot. No, we want to take the last opposite candle, knowing that there's a gap supporting the idea that this price has to be pushed. And then that's when, sometimes you can be more aggressive, and just like that, you can just have your entry here and then just aim for something, right? And you have a great risk to reward ratio. And we even came back to the zone again, but here you can see eventually it fell. Why did it fail, by the way? Or why didn't it held anymore, right? Because the gap was filled and price wanted to go beyond it, right? But that's just how you can find stuff in general, right? And an interesting fact is, even though the market is like always like it's the same principle, just supply, demand, doesn't matter 1 minute, 3 minute, 5 minute, 15 minute, 30 minute, it doesn't matter, right? The price is just following price action, then that's that. It's leaving hints as to where it's reacting from, right? It's leaving hints like these, right? Another example would be here, right? You have a perfect gap like this orange candle, right? And this green candle, it left a gap here, right? And if we mark it up, you'll see that we almost touched it, right? We never actually did, but that's okay. We don't force any trades like this. This is still, in general, a very good supply and demand zone for the future. We never came back to it, no problem. That's why we want to wait for our touch before doing anything. There's going to be several opportunities in the markets every day. Another example would be here, right? No gap here. I mean, there's a big gap here. We can just mark it up. It's a high probability zone because it's also following trend direction. It never was touched before, or like again, but that's not an issue. That's mostly because we are on the 1 minute time frame. If we go to the 5 minute, by the way, the probabilities start to increase even more just because it's a higher time frame, right? One candle holds more power, more information basically, and therefore a higher probability in itself. It's less of a cluster and more of an information, right? So in that matter here, for example, same situation. Remember these highs that we've seen on the 1 minute just before? Here you can see that we also had a gap, right? In between this here. You see how there's like a gap? We filled it in a little bit too motivated, right? So we pushed through, but once we had a break of the candle right here, could have taken our trade off the 5 minute, right? Good trade, perfect example basically. And sometimes you want to be very, very, very punctual with your zones, because something like this, you gotta have, like you have to develop a very good eye here. There's also a gap in between this here. You see how there's like a gap here? Very important. And then you know that there's a, see, this way it's harder to see, right? Sometimes you just gotta zoom in, see, oh yeah, there's actually a gap. Then you can easily just zoom out again, no worries, and whatnot, blah, blah. 5 minute time frame, supply and demand zone, easy peasy. We went up, waited for us to come back to it. This is where people get nervous because, oh shit, is this zone gonna hold or not, blah, blah, blah. But then we can see we broke structure to the upside. Could have taken our trades from, for example, here. Stop losses either down here, here, or here, according to, you know, these past candles and zones and whatnot, however you want to prefer it, and just aim for something, right? I personally like to aim for 1 to 2s, 1 to 3.333s, because that's just how I risk stuff, or 1 to 5s, but 1 to 5s, like I always like to put my stop losses to break even after I hit like a 1 to 2. And I know that this is like a lot for you guys right now, but I just want you to remember one thing. Come to the markets every day and look for any pivotable points, right? Direction, whatever, and just mark up the highlights like this, okay? Highlight. These are like the highest zones that we had in this situation. Is there anything for us to mark up? I mean, this would be interesting. This would be interesting. Was there any gaps? Not really right now. Not anything too crazy. Okay, no problem. Just leave the zone as it is. But maybe I'm missing out on a trade. Hey, yo, just relax, okay? Every day is a trading day, but not every trading day is a trading day, you see? All right. And then eventually we'll find something like this where we just trend up like crazy. Boom, bam, bing, bang, boom, right? And around here, around the last low, we left a gap and a zone. We hit it, and we can take the trade to the upside. Also going with the trend here, as you can see, that's like moving averages. They are just interesting information for me to take into consideration. And this is something that you find on every market. Look at, for example, gold, right? Same principle as before. Let's just see if we can spot anything. Like you see something like this. You have like a high here, then we broke low. And it's very interesting. Your mind just needs to think, why the fuck did we move up like crazily last time we've been here, for example? Just mark it up. It could be interesting in the future, or maybe it has been interesting in the past, right? Here, this is like a zone. Remember, right now we are on the 5 minute time frame. So if we just mark up this high from this low, right, taking this entire zone into consideration, chances are pretty high that on like higher time frames, this is a zone. See? Wait, let me get rid of both of these zones. This is the cluster, right? On the 5-minute time frame, that would have been a good example. Boom. Supply and demand zone, just put it up like this. We shot up like this. We had our retouch here. Then we would have entered our trade from the 5-minute. I always take my entries from the 5-minute, right? So I would look out for trades in this area, like entries. So I mark it up. So that's when we broke the structure. Entry just, entry just here. Stop loss either here, here, or whatever. In that case, I would do it like this because I just anticipated a high trade and whatnot, blah, blah. And then you can see, boom, cool trade again. Your stop loss would be on break even, or you would just take your profits. And then that's all cool, right? And you would just always, all day, in and out, just come back to the markets and look out for zones like this. This year, like the red box and the blue box is like London session and New York session. What I like to do is just basically pre-London session, look for any zones that haven't been tapped yet. This is like a perfect example right here. So this is where London session starts my time, right? And this is what's been over from Asia session, right? So we have a push to the upside, and then we have this last opposite candle, plus we have a gap here, right? Perfect zone. London session starts, bam, 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 bam. We move down, we hit it, we go up, no problem. Entry right here, bada bing, bada boom. And I mean, yeah, great entry. We already seen what is possible. And I know that this is in hindsight right now. It's way easier to speak in hindsight. I know, I'm aware. It's just that you understand the concept. All the other stuff, like how long do you hold the trade and whatnot, how do you manage your risk, that's all on you. That's on how you interact with the market itself. If you want to increase your chances of winning in general, right, what you could do is basically go into the higher time frames. But I would just want to show you like another example. Look at this dream example, basically. Crazy push to the upside, right? We left a zone down here. I think is this a gap? No, this is not a gap, but still, the significance is speaking for itself. Like, what the fuck? We shot up like this? So you want to tell me that this candle here or this small zone induced this here? Fuck yeah, I'm going to mark this up straight up like this, right? This orange candle is our is basically our anchor point. We could also increase the zone down to this low just to be sure, right? Or to be safe. But yeah, just, for purposes here. And you see, we almost had our touch here. Maybe if we've been more aggressive and put like this, we could have our touch. But you still get the idea. You see how this was an interesting point. Once we got into this direction, we moved up. I'm telling you, there's hints in the market. There's patterns. And yeah, what I wanted to show you is like on the 1 hour, for example, right? Just do the same stuff basically. Look out for zones here. This crazy move to the upside left this candle all alone. The opposite candle, mark it up. And then we see that we had entry possibilities here, right? And since we take entries from like the 5-minute, at least me personally, I would just look on how this would be. Aha, look at this. Easiest trade of my life in that situation. Boom, we come down, push up, we break this candle here. Stop loss goes to here. Maybe aim for any of these highs here, for example. Like 1 to 3 possible. I mean, you've seen it went even higher, but I'm just telling you what I would be looking for. And then that's that. And the principle just keeps on repeating itself all the fucking time. You just got to be very careful and not just enter trades just because you entered the zone. That's basically my approach, how I go about it, right? Same goes for oil, right? I've seen like stuff, like I marked stuff up before. Same situation. Like this is a good example right now. There's like a gap from here to here. After some time, you develop a good eye for that. Last time we've been up here, we shot down. So we just mark it up. Right now we're in this zone. If I would be trading those times right now, I would just see how we would react. Do we break this low? If we do, you see me in a sell trade, right? Same situation here. Last time we've been here, we shot up and whatnot, right? It's always the same. Another example would be here. Look at this. Crazy push to the upside. This candle right here is all alone by itself. Also with a gap in that zone, higher probability. We came down to it. We came all the way down here. Bam, bam, bam. Broke these candles here. In that case, I would just put the stop loss under the zone because it's still a very good trade, right? Bada bing, bada boom. Very high trade. Once again, that's how you can catch them, right? That's how you can catch them. Eventually, you would have been stopped out, but come on, bro. With like a 1 to 4, I hope you already took profits. If not, bro, what you doing? You gotta watch some risk calculation videos on my channel. They will be coming, but yeah. Same principle over and over again. Just look for crazy moves like this. Like, what the fuck? Like, we just straight up went down. That's crazy. So that's like the most significant zone right here. Mark it up like this. This is just a small breathing candle. Like, that's what I like to call them. There was even a small gap in between here. Once again, you develop an eye for that. Look at these taps. Like, the fuck? Like, crazy taps in and out, right? Bam, bam, bam. As you retract from that zone, no problem. Stop loss above the zone just to be safe. And then you could maybe, try to aim for the same zone again. Take your profits here. Like, you see 1 to 4 again, or like even crazier, depending on how long you take them. But once again, don't get too greedy, right? Every day is another opportunity. We don't have to force shit. That's just basically what you can look at. Same situation again here. Big ass gap around this area again. So this would be a zone, right? Like, I take these highs here. Boom, boom. That was our touch. That was almost another touch around this area. We could have marked shit up. And it's always the same principle. You can follow that. And if this was too much, too fast, whatever, just rewind the video. I know it's much, but I will, make videos on that again. That's just basically what you got to take into consideration. US 30, another example, pre-London session in my case. You see just a lot of price movement in this area, like no crazy significance here. We're just, in this, we're just bouncing here. So this on the higher time frame is potentially a zone. We'll look and see if I'm right with that in just a second. And we came down to this zone. We can see, I guess it's like a 1 hour or whatnot. Yeah, look at this. This entire cluster turned out to be like a zone. Let me just delete this so you can see it clearly. This candle here was pre-London. Then we moved up. Bada bing, bada boom. Crazy move. Since we take our entries from the 5 minutes, there's definitely some possibilities for us around this area here. And if we then go back to the 5 minute and come back to that, you'll see that this is exactly what I just showed you. Here. We touched the zone, we broke some structure to the upside and whatnot. Bada bing, bada boom, Mr. Worldwide in the room. And you are back in another trade for you that is pretty good. Nice. Yep. Once again. Oh, did my trading view just hung itself? I don't hope so, but same principle. Same principle every damn time. Interesting zone right here. This is too much of a cluster. So I would mark it up like this. It's pretty easy for me to spot it like that. Hello, please. Right. See if we touch it. We never came back to it, but see, without even knowing, it got pretty close. We don't force anything. It's all right. Right. On the way up, no gap here. Not very interesting. Somewhat of a gap here. Not very possible to take a trade here. So we just wait. Another opportunity would be here. There's like a gap, right? Plus a zone. You can see we almost touched it. Some people would take this as a touch, right? Taking a trade here. That's like another example of why you shouldn't be taking too crazy risk to reward all the fucking time, because you see eventually you'll hit the stop loss. I'm not saying that you win every time, but once you go with the trade, with the trend, and you have proper risk management, a lot is possible, right? Yeah. So you hopefully by now understand the principle. I can see another gap here. Like the problem is just, you could just go on and on with this like the entire fucking time, right? And that's something that I would recommend to you. Just go through like various charts and just look for these zones. Open up a random ass chart, look for zones of significance, see if you reacted again from it. Like, yeah, what the fuck is that? Like, that is like a crazy cluster. Never came back to it up until now. GBP USD's been moving crazy. What the fuck? I would not take this trade right now. But yeah, same situation. Boom, look at this. Like, that's a good zone. That's a gap right here. So we would mark up this and we would wait for like a touch. Same situation here. The most obvious zone in history. Crazy big gap. Candle here. Bada bing, bada boom. Zone would be here. Another example would be here. Green candle shot up here. Did we touch it? I don't think so, right? No, we never really touch it. But you see the principle. You see the principle. And yeah. That's basically what I would recommend to you. Once again, that was a lot. I understand this. I want to make more videos on this matter, right? I think I also need to gain some experience, of course, but I just want to, hey, if it needs, like, or if it takes 10 videos or so to make it click for you, that's what I'm gonna do, right? It's gonna be for free. So once again, if you wanna give something back, just subscribe for free. I'll be happy. And if you have any questions, make sure to just drop them down below. I will also like show my profits and whatnot, but from every now and then. Once again, this channel here is mainly for me, for my own entertainment, I guess, and to also basically show my journey. But also for you, like if I have any quote unquote teachings that I can give away, I'm just gonna do this, right? Because I just have a passion for this whole topic, and I hope that you also have one. Yeah, once again, future videos are coming up if you appreciate it. Yeah, thumbs up and everything, and I hope I see you in the next video. Bye bye.